Hey there, welcome back to the South Florida Mortgage Report. As always, you have their hat dude wearing mortgage guy Billy May together with Craig A. Garcia, the president of Capital Partners Mortgage. We're actually both with Capital Partners Mortgage. We are like to call a boutique lender here in beautiful South Florida, and we're living the dream, right, Craig?
Absolutely, sir.
Absolutely. Well, as usual, we're going to talk about three things. So today, we're going to give an update on rates. We're actually going to also talk about climate change and a little bit of a tiff between Zillow and Redfin. And then we have a hats off segment for our referral partners and our clients here this morning. So a couple other things here. I hope your Thanksgiving was great. Hope you had a great Thanksgiving.
Oh man, I had a great Thanksgiving, and it's funny. People say hey, this is the start of the holiday season, and I can tell you, for me, it's the start of the eating season. And
Yeah.
Garcia is off to a hot start. I mean, I think it's Garcia 3, food 0. Nothing has made it past me.
Oh, boy.
I am cleaning up.
All right. Well, all that bike riding you do, you need it. You need those extra carbs and everything
There you
too.
go.
So it's all good stuff. Yeah, I had a great. I actually deep fried my first turkey time. I usually do the electric deep fry. Now we got a gas deep fryer. So I didn't burn the house down yet or anything, so it all worked out good. So
Well, that's good.
it was cool. I cooked one for the church, cooked one for the house. Everything was good. So
Good
a
man.
wonderful Thanksgiving
Good
with
man.
families. So listen, if you didn't see our podcast last week, we had Representative Chip LaMarca, State Representative District 100 in Broward County. He did a serious deep dive about this property tax issue that Governor DeSantis has talked about on a number of occasions over the past year. And there's a lot of misinformation out there. Chip was amazing. He really went
It's
through
great.
each of the 7 proposals that the House has. I read earlier this week, the House is back in session. They're looking at it. They're going to chisel it down, probably like 4, I think, of these proposals. And I'm still reading misinformation online. People think, oh, they're just going to get rid of all property taxes. That's none of them. None of them are like that. I mean, remember, he went to really great detail. So if you haven't had a chance to take a look at last week's podcast, Marca, deep dive property tax issue, I thought it was fantastic information.
Yeah, no, I mean, I thought it was great too. I mean, I had no idea there were 7 different proposals.
Right.
So yeah, no. So if you didn't get a chance, I would encourage you to go take a look at that because then, as they start narrowing it down, you'll be a little bit more familiar with what they're talking about, everything. And I think we hopefully we'll be able to tap into getting him back on as it gets closer to potentially getting on the ballot, so people can understand what they may or may not be voting for. So
Absolutely. Absolutely. I think he would come back. We had a great time with him. I think he definitely would come back on. And it's great information from our referral partners because, listen, as a realtor, I'm sure your prospective home buyers and sellers are asking you, hey, what's this issue with property taxes? And this is just great information I have. So let's just jump to the whole rate thing, Craig. The Freddie Mac survey came out. What's it? Sam Cater, I think is his name. The guy who runs Freddie Mac saying, it's about 6.19%. It's been going on for the past couple of weeks. It's getting close to that 6% range. So it's looking kind of good right now before the holiday season. Right?
yeah, and I think it seems like the market over the past week got a little bit more confident that they'll see a Fed rate reduction. I think the week before, it seemed like there was some question about that. But that's what the market is expecting, probably more expecting that there will be a rate cut by the Fed. And let's see what happens next week.
Yeah, and I think I also read that Jerome Powell hasn't been in the news that much himself personally, but I think I read earlier in the week that the president has announced that he's going to say who his pick is to succeed the chairman next month, I believe.
That will be interesting to see when that person gets identified, what the market reaction is to that. Yeah, I'd definitely be looking forward to digesting what that looks like and what the market thinks.
Yeah. All right, so let's talk about climate change, Craig. Climate change and mortgages and real estate. How do those two work together, and why were they in the news this past week?
Very polarizing topic.
Yes.
So I saw, hey, there's a Zillow removed some climate data from their listings, and Redfin came and said, hey, they backed up their, this is why we are, showing all this climate data. So I was honestly, I wasn't really familiar with the situation, but I was just curious about it. So I did kind of pull up the same property on Zillow and Redfin just to see what the difference is and what they're talking about. And it was kind of interesting. And I can see on both sides some interesting takeaways. So what I don't know is what Zillow used to have on there that they took off, right? But
Okay.
what they did that they said was, we're removing this because we got feedback that people think this is too, damaging potentially for property values, and so they removed it from there. And Redfin's they came out and said, hey, this is why we're doing this. We think transparency is better. Now, the interesting thing is when you look at, and it's unfortunate, like anything else these days, so many topics are very polarizing and political, and, you got to pick, everybody, so many people are of the mindset you got to pick a side.
Right.
Well, Redfin seems to be on this, they're basically, they have this section that says, climate risks. And it says most homes have some risk of natural disasters and may be impacted by climate change due to rising temperatures and sea levels. So, which is interesting. Um,
Yes.
and we should say for the record, Bill, that neither of us are scientists. We do not play one on TV, and we
No.
did not stay at a Holiday Inn Express last night
No.
either.
No. No. I'm
So
with you.
this is not our game. But
But it's in the
so
news. It's part of mortgage news. I've actually had a couple of realtors ask me about it. So I mean, it's in the
oh
news.
yeah. So here's the interesting thing. So there's a couple things that they show on here, and this is a property here in South Florida. So flood factor minimal, unlikely to flood in the next 30 years. That's helpful because that's telling you whether you're in a high risk flood zone or not. And really, what it's going to tell you when I opened it up is it was telling you whether or not you probably have to buy flood insurance if you're getting a loan.
Okay. Sure.
That's helpful, I would say. And then you've got a fire factor, which says it's moderate, which is it says there's a 0.46 chance of being in a wildfire in the next 30 years. So
Wow.
seems like a pretty low chance. I don't know why that's moderate, but
Right. Right. Right.
so,
What's the high one exactly?
heat factor extreme. 7 days above 107 degrees expected this year. 26 days in 30 years. Okay, we're in Florida. It's
Yeah.
hot.
Yeah.
You know what I mean? Wind
Right.
factor extreme. 99% chance of strong winds in the next 30 years. And air factor minor. 2 unhealthy days expected this year. 2 days in 30 years. So anyway, I think the flood thing is helpful.
Yeah.
I think the rest of it is a little bit, and honestly, maybe there's some areas where the fire thing might be more impactful. I mean,
Well, I mean, if you live
there's
in
certainly areas.
California, you know what I mean? I mean, I would, I mean, if you live in California, that probably would probably want to know that information.
We're always focused on hurricanes and everything here,
Sure.
and we have hurricane season. And in my travels out west, they have fire season. I mean,
Oh,
that's
yeah, for
that's a
sure.
thing out there. I mean, everything gets very
Absolutely.
dry. There's
Yep.
there's smoke in the air on a regular basis. So certainly, some of that stuff seems helpful. I think when you package it in this, in this talk about climate change and rising temperatures and sea levels,
Right.
you're bound to hit some segment of the population in a way that they agree with that, and another
Right.
segment of the population in the fact that they don't agree with that.
Yeah.
Anyway, it's interesting.
Yeah.
But I do think that if I'm Zillow, I would think that taking all that stuff down seems like I just in one of the things that Zillow is trying to do is they're trying to show people, hey, here's a potential payment on your property. Well,
Right.
if you know that they're in a flood zone and you want to factor in flood insurance, um, that seems like something that wouldn't be as useful to take away, which is kind of what they did. So I don't know. I can see both sides of it, but I thought it was interesting. And I would think that if you are, and in our world, the one that's going to come up that really would impact somebody's payment is going to be the flood, right? And
Yeah.
so if you happen to be in
Even
a flood zone, you might have to get flood insurance. It's not that impactful
yeah.
for by and large the vast majority of people of whether or not they proceed with buying that property or not.
Yeah.
It's not a huge expense. A lot of people buy flood insurance even though they're not in a flood zone, and then it's
Yeah.
very
Well, I'm one of
inexpensive.
them. I'm not in a
I I
flood
I,
zone, you know?
I have it too.
Right.
So
And we live
anyway,
on a canal, right? We have water behind the house, you know?
yeah. Hey, listen, we're in Florida. We're at sea level. You know what I
Sure.
mean? I mean, it's
Yeah. Yeah.
whether you're in a flood zone or not, the minimal expense, that's obviously somebody's opinion.
Yeah. Yeah.
So anyway, I thought that was interesting. I thought we'd take a second and just talk about
Sure.
that.
No,
Um,
no. Great info, and it's in the news, and it's in national news. And you said there's Redfin and Zillow kind of going at it, and Redfin come out with some other report as well, what their market conditions are. We'll talk about it at a later date, what their
yeah.
prognosticators are.
And it's funny. Before we go off of this, and I'll ask you because I've always the whole climate change thing. I've always had a kind of a arm's length kind of view about it. But it's because of a book that I read 21 years ago when this
Okay.
book came out. So do you know who the author Michael Crichton is?
Sure, of course. Yeah, you
Jurassic
did
Park.
Jurassic Park. Yeah, yeah. Yeah.
Sphere. He's
Sure.
made a bunch of books that have turned into movies.
Right.
So he had a book that never became a movie that was pretty interesting called State of Fear. You didn't happen to read it, did you?
No, I did not.
So it's funny because the whole gist of the book, and this is a book that was written 21 years ago,
Uh-huh.
2004. It is about a conspiracy that is, and basically it makes a point, and then it has a whole section in the back of the book where it's kind of making a point that the climate change initiative is not maybe what it appears to be, and that the science doesn't necessarily back it. And he makes he basically the book is a thriller wrapped in this idea that, hey, climate change is not as real of a thing as everybody's making you to believe. Now,
You know,
is
it's
that
funny you bring that up because I haven't read the book, but I was listening to a podcast a couple of months ago and it was somebody else, and they brought up this book.
and I only
No,
bring
no, it was right after the January fires in California because
yeah,
Michael
and
Reagan was from LA, I believe.
I don't know that part, but and again, I don't have a horse in the race one way or the other,
Sure,
but it made me think about things differently,
sure.
the case was made in a way that stuck with me, and I just, I thought it was interesting, and then and really he ties in at the back of it. I'm sure you can find something online where it kind of gives you a synopsis of this, but it ties in how, there's been other things in the past over time that have been big causes that the scientific and pop culture community have gotten behind that have turned out to be not great, and one of them was eugenics. And if you don't
Ah,
know what eugenics is,
yeah, yeah.
that's a crazy story.
Oh,
So
yeah, yeah,
anyway,
yeah.
but it was so I remember it still now, even though I
Sure.
read the book 20 years ago, and he was definitely the only person kind of talking about that at the time. Now there's some more people talking that way.
Interesting. Now
Yeah. So
I'm
anyway, so
put that in my library list next time I make my way down there. So very interesting.
yeah.
Very
So
cool.
anyhow, but
Yeah,
yes, the next topic that we were going to touch base on today was you got a hats off for a
I do.
client, and
I
talk to me about that.
Yep, a hats off a client. This is something, two loans are better than one, right, Craig, so to speak. And yeah, this is something that product people, a lot of our referral partners forget about. It's really geared towards condominiums, and the reason why is because if a condominium doesn't budget, there's about 10% of their budget. We cannot do a full condominium review. We can only do a limited review, which limits us to 75% of the purchase price to do a conforming conventional loan. However, Fannie Mae allows to go to 90%. If you can get an outside second mortgage, somebody can buy a condominium that doesn't budget for reserves, and you can go to 90%. You put 10% down, we give you a first loan at 75%, traditional 30-year fixed. We get you an equity line, a second loan with another outside bank, and we close simultaneously at closing. You have two loans. You come in 10% down on a condominium, for example, if it doesn't budget for reserves. So I have a closing today. Nice young couple, first-time home buyers. They came across a house that actually looks just like a townhouse. 3 bedroom, 2 bath, 2 car garage, et cetera, et cetera. It was built about 20 years ago. It's deeded as a condominium. We looked at the budget. There's no issues with the condominium. Decide not to budget for reserves. And that's not always a bad thing. I mean, some condominiums just say, hey, when we need some money, let's do an assessment or whatnot. So in any event, we're able to give them the 30-year fixed rate on the first mortgage, 75% of the sales price. We got them an outside second mortgage with another outside lender that we work with. They use
Yeah,
our appraisal. The runaround guides are very, very simple. And it's a very smooth process. And a lot of people who are afraid of condominiums, they think, oh, or if they hear the counter does a budget for reserves, I can't do it. This is a win-win for all the parties involved. So they bought this place. It's a 10% down, two mortgages, and a very competitive rate on the second mortgage as well. And it's just one of those unique products that we offer. Not all lenders do, Craig, and we do
sure.
them all the time.
Yeah, no, that's a great story, and definitely, yeah, there's the complexities that are involved these days with condominium lending. That's kind of a structuring deal where you do the first and the second that's been around for a while, and it's just a little bit more challenging now with some of the other stuff that's going on. But yeah, great thing, and good to remind people, hey, any kind of condo, you definitely got to be open-minded depending on what's going on with the project, because
Yeah,
not only we have to approve the borrower, but now the project has to get approved.
yeah.
And and every project's got its own unique stuff that may be going on, and so having a lot of options and is typically very helpful in this
Yeah.
circle.
And we're seeing,
Take
I
it back.
have some other, loans working right now. We're seeing other issues, things we see periodically with condominiums we always ask for. One of them was, they had a high deductible on like, what was it, sinkhole coverage or something, Craig? And
Yep.
another one didn't
Yep.
have flood insurance. The things that we see, we're still going to be able to, close these loans. Just there's challenges that we find that just don't fit in that Fannie Mae, Freddie Mac conventional product.
That's right. And sometimes, there are some investors that we work with that will accept certain things and others won't, even when we're talking about a Fannie Mae loan with both investors. So yeah, so having a pretty deep knowledge of the different investors and what they accept and what they don't accept, certainly, yeah, we have to go deep into the bag of tricks sometimes to get some of these deals to the table. But the point is, you get a willing buyer, you get a seller wants to sell, and sometimes we gotta drag some information out of the association or the management
Yes.
company. But
Yeah.
patience is good on those. Creativity is good.
Yeah.
But I think overall everybody's got to be a little tenacious to get some of those deals closed.
Oh, absolutely. Yeah, yeah,
Yeah.
yeah.
So,
Condominiums. So it's all good stuff though.
yep.
But good stuff, great information, and hope you have a great rest of your day. And Craig, we will see you
At
for
the
for the
closing
closing
table.
today. I'll be there today, actually. So
All right.
take care.
Thanks, Bill.
See you soon.